morning, everybody, and welcome to today's episode of Market Check. Of course, I'm Snorlax. You also know me as Tommy, and I'm joined by Max Tucker and Dr. Will's Outlook. It is FOMC day. Hopefully, we can get a resolution to some of this what would you call this price action, guys? A meat grinder? I mean, that's what I would call it.
Yeah.
An absolute meat grinder, just chopping people to bits before all markets really pick what looks like a higher time frame direction at this point. Just looking at Tucker's screen and even framing equities if you want to as a range right now, right? I mean, it's reflective of a market that's indecisive and hasn't been able to break in either direction, whether that be to break above, right, like we've talked about, and potentially chad to all-time highs, or if it's going to break down, maybe this is the high time frame local top. Who knows? I mean, there's a lot of questions that we still have over a higher time frame, but the real question is, what is going to be our directionality heading into October, into the end of September, and of course for Q4, right? And now yesterday we had I felt like we had some pretty interesting movement in what was occurring with yields versus equities. It almost seemed like the bond market was potentially trying to telegraph or tell Jerome Powell that he should continue hiking and that higher for longer is the narrative that the market should see continue to prevail. But it looks as though yields have somewhat walked back today. I haven't quite checked them, myself, but speaking with people, I mean, it sounds like they have kind of walked back a little bit. We'll see what Powell says today, though. I mean, maybe we could get something unexpected. Perhaps it is a warning sign, or maybe it's like the last few meetings where Powell says absolutely nothing of substance beyond what is the phrase that he loves to use? We're evaluating the data and the situation, basically some iteration of that each time. I would love for him to say something that kind of deviates the norm, just because markets are getting so well prepared for these events that it is killing the intraday volatility in trading them, because they are so well prepared. So if we do, get some sort of surprise from Powell, not only is that going to throw a wrench in things from an intraday standpoint, but positioning is very heavily skewed towards the idea that he will pause or that he will not raise rates at this meeting. So just a lot of questions that I want to have answered by our big guy Jerome later today. Maybe it's just a nothing burger, but I think perhaps we could get some more actionable intel from him today. As far as equities go, I mean, it didn't seem like they were doing too much. I guess we floated higher over futures. I am curious to see where the VIX ends the week, though, because it's been catching a bid over the last few sessions. And if it continues to catch a bid, then, I mean, obviously that goes without saying that equity markets are going to be weak. I think the standpoint that they're crushing it into FOMC when it's already at 4-year lows, I mean, it's a bold bet, I would say. I wouldn't be shorting volatility at these levels, but, maybe they know something that we don't. As far as crypto goes, I mean, when you talk about chop suey, it's been even more of a chop fest in crypto than it has been in equities, especially if you're trading these altcoins. There's not really, and we were talking about this before we went live, there's just not that much liquidity in altcoin markets. There's not that much participation. So what you're getting is just a lot of momentum driven and perp driven squeezes that are very difficult to trade and very difficult to position for if you're expecting down or up, right? It's just a very choppy market. Bitcoin kind of summarizes this pretty well, I would say, with its price action since Monday. Look at the hourly chart on Bitcoin. It looks one of the ugliest things I think I've ever seen. But it also shows me, right? I mean, we have a lot of participation at this level. So we're either going to break out in a big way or we're going to break down in a big way, which is awesome, right? Because what we want at the end of the day is volatility. Meanwhile, last thing I'll say before we kind of open the floor up, altcoins look like garbage. ETH Bitcoin is literally sitting on a cliff right now, and it looks ready to break down from a 2-year distribution range. And momentum looks like it too. I mean, it looks like it's going to go set a low lower than the one that we formed last summer, obviously when everything happened with staked ETH and 3AC back then. But it's very hard to be bullish on alts, even though, Bitcoin could have fireworks, but altcoins in general, they look horrible. And this chart to me tells me one of two things: that Bitcoin USD is either about to gigascend before that everything is probably about to nuke. And I mean, if you've been watching the show, you know what camp I'm in. But I want to open up the floor, guys. I want to talk about Powell. I want to talk about everything in between, crypto, the dollar, volatility. How are we doing today? And if there's anything on y'all's mind that's particularly pressing, I'll yield the floor to you guys.
Yeah, man. So ETH BTC looks like death. And I want to think and I want to hope that this is some sort of really, really drawn out high time frame reaccumulation. And, people are just shorting it like crazy. And everybody's rotating out of ETH into Bitcoin. And we're about to spring back up. And this is like just a giga bear trap. But my gut's telling me, and the seasonality is telling me that it's not safe to hold any alts right now. Even Ethereum, which is like the king alt. So I think ETH BTC probably makes a new low, if not maybe double bottom around where we did back in 2022 on that drop. Yeah, somewhere around there. I like the 0.05 level, but truthfully, I think we probably need to go lower. But yeah, I mean, it's possible this is just sort of a mega reaccumulation. But I mean, look, if you just take note to how Ethereum has performed before a Bitcoin halving, this is perfectly in line with what we've seen. Typically, Ethereum hasn't performed well leading into a Bitcoin halving or the year prior. It's typically bled into the halving, started to recover right around the halving, and then Bitcoin will typically lead or outperform in a sustained manner off of the bottom. And then from there, it's time to rotate into Ethereum and alts and just try to chase some beta. But yeah, the chart looks really bad. And I mean, there's a lot of other top 10, top 20 projects that are bleeding dramatically against their Ethereum pairs. I mean, look at .eth, for example, something like that. If ETH looks like that against Bitcoin, man, look at how some of your favorite alts look against their Ethereum pairs, man. Terrible. Just death, man. Just ugh. Dead cat bounces along the way, but anyways, leading into FOMC, given that today's title is in fact FOMC Day discussion, what we think happens next. Well, I changed my background for today. Got the most powerful man in the world, Jerome Powell, sitting right next to me. I think you have to operate under the assumption that the market is correct. They have been all year. We should get a skip today. They're not going to call it a pause. They're going to call it a skip, right? They need to give themselves the ability to back channel and issue additional hikes if necessary. I can appreciate and I agree with what Tommy said as well. They're going to use the same jargon that they always have. We remain data dependent and committed to our long-term target of 2%, blah, 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 blah. And they're not really going to say much, and the market's probably going to whipsaw. And I bet it will go down and then suddenly it'll recover and we'll rally into the close or something like we always do. But point being is today is, I mean, it's a meat grinder. It's a chum fest. This is it's nothing. It's just going to be really inorganic, mechanical price action all day. Don't even think about trading options today because the premiums are all just not favorable at all. So anyways, I'm trying to not really position. I do have a lot of positions. Those that are in our Discord, they have access to all my positions, so they know what I'm in. I'm in a handful right now. They are in profit, which is nice, but I'm not really expecting a whole lot today unless we get a real bizarre piece of information or Powell says something really goofy, but I don't think he's going to intentionally spook the markets. So to me, like, could they have done a 25 basis point hike? Probably. Was the bond market acting bizarre yesterday? Like there was a 25 basis point hike coming? Yes, it was, but I still don't really think I can. It'd be so bizarre and it would be so abnormal to see a 25 basis point hike when it's been a 98 to 99% certainty that we're going to get a skip today for like over 3 or 4 weeks now. I don't think they can hike. I mean, the market would free fall if they hiked, even by 25 basis points. The market nukes whenever it's surprised. So it's just, I don't think it's a matter of if they want to hike anymore. It's like they literally can't. They can't without spooking something. So they'll probably skip, and I hope they're done hiking after this. But my gut's telling me that there is a repricing event across the board. We're probably going to see we're probably going to see things bleed through September and October and then recover from there. And I want to go on a whole spiel about that, but I don't want to do it this early in the show because it's going to take up some time. But yeah, anyways, let's get the discussion going and let's talk some charts a little bit here. But I do want to get into why I think we're going to dip through October and then rally after that at some point. But yeah, anyways, what's going on, guys?
I don't know, man. What do you think, Will? What do you think? What are you thinking with equities first?
I mean, equities are kind of pulling out. I don't like to see moves into FOMC. I tend to fade those. So if it's down, then it's up, and it's up, then it's down. For me, but I mean, overall, I mean, we'll see what happens here with equities. I want to talk about equities, but my mind is on crypto, and it's based on like what I'm seeing as far as actionability and potential, risk on that side of things.
Will, tell
just
them
because I'm exposed to both markets.
Live, man. Keep that energy. Tell them what you told me. Don't hold back, Will. Tell them how it is.
Man, look, alts they're not looking good. Like I posted a chart on it in the Discord just now, but the amount of failed crypto projects roughly in 2018, 2019, 751, right? That was a good chunk of the market then. We haven't even seen close to those kind of failures yet. And really, in reality, I think that when you consider two things, and I'm gonna give you the realistic scenario, it's basically sell pressure, right? These companies have to pay overhead, so all altcoins have sell pressure based on that. And it's not just overhead, it's marketing. There's a lot that stacks on running a company versus just running a company. So either these things die out in volume and just kind of slowly fade away while nobody's paying attention, and take the money and run, which we've seen a couple of projects already do. Or these projects, I mean, I don't know if you guys saw Moonbirds, but they took $100 million ICO and basically just rewrote their entire Twitter and haven't said anything about it and are not apparently launching the project, and nobody knows about it or nobody's paying attention to it. And you're seeing like a ton of these projects just do this at this point, just take this money from these ICOs, IDOs, and just not even launch, let alone companies that are trying to survive through this bear market are adding, I would say residual sell pressure on these coins because it's their only source of revenue, right? Is to sell their own token. So they're trying to survive and they're pressuring their own coins to the floor. It really comes down to like what's your case or use case for saying these things actually survive, right? Polygon, any of these could go under, based on this, right? And I'm not pointing out Polygon specifically, but I'm saying Polygon itself, I think it's got a well-structured, I would say, distribution phase and so on and so forth. But at the same time, there's a lot of downside risk here for Polygon. There's a lot of downside risk for a lot of alts. And I don't mean like down to previous lows. I mean, these things could easily violate their lows and go lower. And, a lot of people are not willing to consider this. They're not willing to think about it. They want to pretend like, things have changed, but there's been no cycle to prove anything has changed. If you're saying things have changed, you're basically just speculating. And if you're speculating, that's not a good way to invest. It's just not, because I can speculate and make up things every day. I've actually discussed this in a couple different spaces where I'm like, a lot of the time these people come up with things. The founders don't rebuttal it. And so they think that they're possibilities, or they think that they're realistic because they came up with an idea and said, this is what's going to happen with the project. But there's been no indication from the project itself that that's going to happen. Right. Again, it's just people living in fantasy world when it comes to these altcoins, thinking that, these projects are just going to make it. And the reality is when you look at things here, I mean, Bitcoin looks sure. I mean, if you're talking about Bitcoin, I could say I can get on board. Like, hey, Bitcoin's a buy. It always is into the halving. It always is, right? And if you scoot the bottom on Bitcoin, you probably got the best opportunity of a lifetime. But altcoins, man, again, sell side pressure. I mean, ETH, I'll give you sell side pressure on that. ETH Foundation, they sell the top every single time. So like if you think there's not sell side pressure on that, you're wrong again. There's sell side pressure on every single one of these altcoins except for Bitcoin. Bitcoin doesn't have overhead. It doesn't
There's
have a
been
company.
an ICO buyer for ETH that's been selling over the last like 2 or 3 weeks. Kobe said it was
selling.
I think it was from what Kobe said, it sounded like it was I think his name is Lubin, or he's like one of the richest people who owns Ethereum, but I guess he's been selling some recently.
Sounds bullish.
That's tough. But I've done some analysis on this, right? So we're not even talking about top 10 projects. We're talking about Ethereum, which Ethereum should really be viewed, if you're a trader, as the index for altcoins. All right. This is your like Vanguard ETF of altcoins right here. You know, if you want alt exposure, ETH is your guy. All right. ETH is your guy. But these are all the Bitcoin halvings marked out. And I did a video on this too. I mean, you guys are all here on our YouTube watching right now. So if you want to find that video, I probably posted it like 3-4 months ago on what I think is going to happen going into the Bitcoin halving. At the time, I think we were at probably like 0.068, something like that. And I want to just talk about what typically happens leading into a Bitcoin halving. All right. So how far out from the halving are we right now? We are roughly 200 days, give or take. It's not perfect, right? But roughly 200 days. Let's go back, see what happened 200 days in before previous halvings. 200 days. Okay.
Well, that one's a little tough, but
it is. But point being is like you want to hold Ethereum when you get the crazy expansion. Like even though this seems like a lot, like I mean, yeah, Ethereum was like 10 cents or whatever, and here whatever, there was little bits of up, little bits of down. You don't want to hold Ethereum because it's just generally riskier than Bitcoin. You only want to hold it when it does this, and when it does this,
when it's getting ready to outpace Bitcoin.
When it does this, and that's when it's going to happen, is after the halving. The point being is it happens well after the halving, right?
So this
after
this
the halving,
this basically implies you want to be in ETH at the yearly open of the post-halving year.
January 1, baby. I actually probably start scaling in December. I think December's been a decent year for ETH, if I remember correctly.
Mm-hmm.
But
you know what's crazy here, Max? You could fractal that 2018 drop into that 2020 bottom, and I bet you it'll lay over where we're at right now.
That's exactly what I've been doing.
That's what you've been doing.
That's what I've been doing. Yeah. No, I can load that up real quick if you want to see it.
Yeah, let's see that, because I think it would fit well. I mean, it'll play right into the red trend there.
Even if it holds around here, which I don't know if it will. Up, down, up, down. You want to time the expansion. You want this. You don't want to deal with this, man. This is just going to be annoying. You don't want to deal with that. You only want to rotate into something when you believe that you are at the nearest point of, the expansion phase, and that's not.
It's cost to capital if you're not doing that. That's
what I was trying to say on a space the other day. I was like, hot take, guys. I like to buy things when I think they're gonna go up. And that was like shocking because everybody's like trying to catch knives and whatnot. And I'm like, it's exactly what EXO says, right? Like you want to buy the end of an accumulation range, not the beginning, because you don't know.
Snorlax, the green stealer.
I'm stealing now.
Wow, he just did it, man.
He did it again.
Wow.
I want to be clear though, like for me, like this whole conversation is bullish for Bitcoin. It's just bearish for everything not Bitcoin, right? And you can call that a maxi or whatever, but this is just the reality of the market. Bitcoin moves first.
Not bullish in the short term, brother.
I mean, look, 1, 2, 3, 4, 5K downside.
I'll be honest. I'm not entirely sure I see 0.03 on ETH BTC again. I'll be honest. I don't know if that's going to happen.
I just think when you look at how measured this move was, this breakdown from this high, like if you were to clip that, and put it here. I don't know.
Yeah, I mean Hey, it's possible, man. It's possible. This is not the time. I won't be going to bat for any altcoins right now. I won't run to their defense even if it's ETH.
The
This is not the season
defender.
for it, but that would, I
let's-
mean, dude, the implications of ETH BTC going down 50% from here. I mean, you're talking about altcoins going down 90% then.
Well, I think you could probably deviate like 0.04 on ETH, but maybe you don't get 0.03 on the dot, but
this is the optimal place to be allocating to altcoins, I guess. You know,
let's add context to the conversation though. Let's add a context. So context specifically, right, means that alts could, which I think most will, bleed. Ethereum could stay where it's at right now. It could never. It may not never move. Right. We're gonna still out there in the most bullish case. Ethereum doesn't move at all, but Bitcoin just outpaces Ethereum by light years. Right, as far as upside. So Bitcoin goes to 40, then 50, and Ethereum just hovers around 2. Like that's ETH BTC could be that case, right? And that's the bull camp case. And in the bear camp case, you know, and I'll give you the mid ground and then I'll give you the bear, right? The mid ground is ETH is slowly bleeding, Bitcoin goes up a little bit, right? That's the mid case. The bear case is ETH is nuking, Bitcoin's holding, or Bitcoin's ripping, right? That's the bear case. So that's 3 examples of how this could play out, but all of them lead back to the same result as far as BTC's pair, right? And this, I like to add that context because I think a lot of people think that when you throw up things like this, it just means ETH nukes, right? ETH $300, ETH $500.
No, dude, that's a great point because what we saw last cycle, and I was part of this too. I felt this pain where I was holding Bitcoin and ETH, but I was holding more ETH than Bitcoin. And ETH BTC was dipping sub 0.02 and Bitcoin was moving up and ETH was moving up. Both were moving up together, but ETH BTC was getting hammered. And I was like, damn it, man. Like, why are my holdings not, performing well? I was too heavy ETH at the wrong time. So what you're saying is, I mean, it's perfect. Everybody needs to recognize this. There's a time to hit that rotation, and it's not at the ETH USD bottom. It's not. It's once Bitcoin is going parabolic or starting the parabola. Okay.
Yeah. Once strength starts to set in, then you could take risk, right? You're already taking risk in crypto, being a Bitcoin. You're taking even more risks when you get into altcoins, and a lot of people are like high risk, high reward. No, high risk, possible 0 in some of these altcoins.
Like it goes.
Man, that's crazy, Tommy. That is.
I don't know. Kind of what I think might happen.
How does Matic ETH look?
ETH did have a good point or a good pump, Tyrell, but I want to point out one thing that I remember specifically. It was ingrained in my head from 2021. Does anybody remember when ETH couldn't get above $2,000? Couldn't get above 2,500 for multiple months while Bitcoin just continued to rip and rip and rip and rip.
I do.
Literally just sat there, wouldn't do anything. It's like you're sitting there poking it with a stick and it's just looking up at you.
Do I?
Are those equal lows right there? Yeah. Yeah. Draw those lows out. Those are nice.
We're gonna break that.
Yeah, we are.
If every alt ETH pair is an indication, we're probably gonna break that.
And something really important to note above all else is that we don't have enough likes on this video. Guys, thank you so much for being here on your FOMC day, Wednesday, September 20th. This is Market Check brought to you by Because Bitcoin. There are 43 people watching. If you are enjoying the content so far, please consider hitting that thumbs up button for us. It just takes a quick moment, and it really helps the channel grow. And I mean, you guys always come through. You guys always kill. And the reason that our channel is growing so quickly and the show is gaining popularity is because you guys always support us by hitting that thumbs up button. So our first TP is usually always 30 likes, but we've been pushing pretty close to 40. So I might have to start moving that TP where TP1 is 30 and TP2 is 40 on the likes. But yeah, I mean, initially we were at we were shooting for 10 likes, then 20. Now 20 is like, I don't even have to ask you guys and we get 20 likes before we're even really live. So we're at 26 likes right now. Let's see if we can run to 30. Thank you guys so much for the support and for being here. But let's kick it back to Tommy to look at Litecoin BTC.
Well, I mean, sometimes when this pair will show strength, it could be indicative of a bottom because it's like an OG coin, but it looks pretty terrible. It looks like Solana USD before it just goes to zero.
Yeah, that doesn't look good at all. Looks like it wants to roll that floor on the RSI too.
This was my plan. It actually ended up playing to a T back then. I didn't play it, but yeah, this looks like it's coming back down.
That's
here.
range low. Yeah, that's range low.
Let's give the audience a good example here of what could happen. Let's just pull up ADA USD pair.
I think that's a good one because you have a lot of history with that one.
Oh my gosh.
Oh, I had a line drawn on it.
I had a line drawn on it. Now, I just for context, so people know, at the bottom there, that ADA BTC pair, ADA was sitting at 2 cents. We're not far from that bottom.
Let's see what it looked like. Yeah, because it took ADA Bitcoin bottomed, but I want to say Cardano kept bleeding for a little bit.
Correct.
Yeah, and here, like we ended up going down another almost 50% at one point. So there definitely is something to the allocating when something's about to go up, and that's kind of like everybody wants the glory from catching a inflection point when the higher EV play is generally to play confirmed trend reversal.
Mm-hmm.
Like here, for example. I mean, you could have, if you had aped here because you thought that the low was in, you had the MA crossovers, momentum looked like it was ticking up, but it wasn't ready, right? You hadn't completed the full cycle. Whereas once you got this crossover, rather than trying to like snipe a bottom in here, I don't know, you could have just bought in here for a little bit more expensive per Bitcoin, and you would have had a lot less drawdown, which is, I think, very important, because when we talk about drawdown, what takes most traders out of a trade? It's going to be drawdown.
Can you mark out May of 2020 where the Bitcoin halving occurred, Tommy? I think that will help put things into context, where you can see ADA USDT or ADA USD bled after the Bitcoin halving, and then ADA BTC got absolutely smoked. So it's just, it went on a crazy run, right? It performed very well, but not until Bitcoin really confirmed it was going to go parabolic.
Yeah. So it oh my God. Yeah. It basically knew. It got a little pump from around the halving, and I guess COVID recovery. So some natural mean reversion, thank God. But after that, Bitcoin moves first, right? Like this is the part of the cycle where
mark the halving out for him, though, just for visuals.
That's where Bitcoin moves first, exactly.
What was it, in May?
Yeah, May of 2020. So nice little jolt, but then you can see that it just got destroyed against Bitcoin. It didn't make any sense to hold it.
So basically,
because it took Bitcoin a few months to really get going, is what happened for sure.
I guess you're kind of stagnant on the Bitcoin pair. If you had bought ADA instead of Bitcoin, you could have been capitalizing on the Bitcoin gains in the meantime and then rotated.
Yeah. I think you would have outpaced at a certain point.
What was it, a year though, from the halving to when you wanted to be in ADA?
You would have outpaced at those
7
lows,
months,
and you would have been able to buy in 50% cheaper. Snorlax.
When was that line? Like, put a vertical line right before that pair went parabolic.
Right here, December.
Right there. What is it? Okay, so it was about 6 months? 6 months after the halving, when you want to rotate.
Let's not look at that.
Well, that halving was a little different because we were coming out of COVID too.
Oh wait, no, I was drawing some. I've like done a bunch of stuff. I'm trying to find like a clean Bitcoin chart, but I know I don't really have one.
I mean, we could even pull up ETH. I think ETH even has a great position showing you kind of what happens when you try to front run ETH over Bitcoin.
So Bitcoin got the first big move. It went from 10 to 40K, and then alt started catching rotations. But
yeah, I mean, let me ETHBK.
DYC, huh?
I mean, man, that looks rough. But no, like about how much time after the halving do you want to get into altcoins, right? Like it seems like it's about, I mean, maybe even here, 200 days ish, maybe.
Look at price there. See where price was.
You can't
Tucker.
really do it on this one, but
You guys can hear me, right?
yeah,
yeah, what?
Yeah. Look at price at that same time. ETH dollar pair.
Let me move it down.
No, actually, do the overlay. Do the overlay of the dollar pair against the against the ETH BTC.
Okay, so ETH BTC is the line. Let's just do regular. No. All right, ETH BTC is the line. Yeah. I mean, yeah, you didn't really want to buy it. I mean, it drifted up, but
I mean, there's really not a lot of gain there. There's not. You're talking like pennies, right? When in the bigger scheme of things.
yeah, and that's the point, right? Is like ETH probably went from whatever this was, like 400. It probably went from 400 to like 650, but the pair bled. You would have rather been in Bitcoin, right?
Mhm.
So,
And really, you could have drawn your parabola as
parabola.
as it's on the tip of my tongue.
Yeah.
Now he's got it in my head. But you can draw your parabolic move. You could draw your parabolic move from there, right? So if you drew like that half circle at the bottom.
Look at that. Yeah. I mean, see, look, ETH went up from the halving to when
Bobby's over here
the
got me messed
pair
up with that
really
word.
bottomed. I mean, ETH did go up like, is that real? It went up 200%. I mean, I feel like this halving was a little skewed because you just came out of COVID, right?
Well,
So
if you look there too, look,
there was some reflexivity with that.
Ignore the COVID. Just look at see the parabolic move where it starts to move before the halving on ETH BTC at the bottom. So you can kind of see the higher lows and where you're starting to ramp up, right?
Mm-hmm.
So like right there, exactly. So you can kind of see that it's starting to move against Bitcoin. At that point, you could look at any chart and see that indication. You could say it's hindsight, you could say whatever, but if you got in on any one of those, you could have taken the upside.
Yeah, and that's the thing is right now, if you look at ETH BTC, where we're currently at, we're nowhere near a structured uptrend, man. We have you want to wait for a couple bottoms to form on a lower time frame, something like that.
Exactly.
And
you have time.
Yeah, I mean, you look at ETH BTC, and I mean, we're in a very structured, like limp meat pattern, as Will calls it.
Yeah, look at that.
Like, what do you want to wait for? You want to wait for a shift of the trend. It doesn't matter about buying the bottom on the pair. It's you could get lucky and try to buy the bottom on the pair, but it's not really going to serve you that well. You might as well wait for a structured uptrend. And December, January, probably a better time. Right now,
I remember when Ben Cohen was making videos and he had this exact thing.
He had like a broadening wedge drawn, I think, though, didn't he?
Yeah,
wasn't it kind of like
Yeah, it is kind of like a broadening wedge. You can call it a channel, but like if you were to draw it from end to end, it is more of a broadening.
Yeah.
But either way, the point is that you're getting higher highs, higher lows, ETH Bitcoin pair, right? And once you start to see any pair form higher highs, higher lows against Bitcoin, it's a confirmed trend. And I think a lot of people don't understand the difference between a confirmed trend and buying knives. Yeah, that's
people,
more like
people assume a bottom is in based on USD valuations when they don't really give the full context or the full story.
Yeah. Well, I think it also comes back to people not believing that BTC runs this market. There's a consistent amount of people that believe that this market could operate outside of BTC, and I consistently tell them BTC is the reason the market does what it does.
Yep.
Without the halving,
Tether is
no
the
interest.
reason the market does what it does.
Well, Tether is just what keeps the market churning, right? I mean, if you give enough steroids and everything else, the market can keep going.
But man, it's recency bias. I mean, think about what just happened in crypto, man. We just had 3 months, give or take, of crazy on-chain degeneracy. Bitcoin didn't matter, you know. It still ran the market in a sense, but you had a market that was completely separate of Bitcoin. You know, micro caps that were pulling 200, 300, 10x moves in a week or less. So people stop respecting the king. But now that regime is over, you will kneel to the king of Bitcoin. Trust me, when Bitcoin's on the edge of a cliff, it doesn't even have to nuke. When Bitcoin just feels like it's going to nuke, look at what happens to altcoins. Look what happens to your on-chain coins. You had a small window of time, a little Goldilocks period where you know, you could hit a 2x in an hour. You know, that's fun. We participated in some of that too, but it's over, and it's important to recognize that it's over and stop throwing money at some of these projects that are going straight down and to the right.
Again, I mean, I want to point out though, Max, like I posted it in the crypto channel, like almost most of the altcoin market got destroyed in 2019, 2020. Not only got destroyed, those projects are dead. They're gone.
Yeah.
And, you know, you're getting a lot of new projects in the bear, and you think that those are going to be the next cycle movers. But in reality, all those projects could be dead before the next cycle even starts. And people are not willing to accept that. Right. That's always the issue. I mean, when you see $100 million NFT project rug, basically, right, and not say anything and change their Twitter and pretend like nothing happened when they just, you know, basically got $100 million in investments.
Wait, what project is that?
Moonbirds.
Oh, I remember Moonbirds.
Did they rug? I didn't know they rugged.
Well, it's a silent rug, so they're not admitting to it or anything. They just changed their Twitter and all their affiliations to Moonbird.
Those were expensive, man. I remember those were really expensive. Wow. Okay.
Remember Mint was like 4 or 5 ETH back when ETH was over $3,000.
I knew a guy that had like 5 or 6 of them, and I was like, damn, man, I missed this one. That's crazy. I think he's still holding. I didn't know it was a rug.
I don't. Well, I mean, I'm calling it a rug, but in reality, you know, I'm saying it's a rug because they switched all their info and didn't say shit about the project.
Yeah,
right?
That's a rug.
Like, when you do that, that's a silent rug, right?
Called a soft rug.
A soft rug.
Yeah. So now you're probably going to start selling off all your assets into the pool, and nobody's going to be paying attention as you're slowly exiting. And you're trying to unaffiliate yourself, kind of like what Mark Cuban did, right? Mark Cuban came in, funded a bunch of projects, then unfollowed every crypto person he was following. I thought that was hilarious at the end of the bull market when he just like started going through and unfollowing everybody.
Speaking of rugs, Cuban just got destroyed, man.
Oh,
They robbed him, man. I think they got him for like $900K.
Jeez.
What are you doing here, Tucker?
Just a little VIX TA. You know how it is.
I'm telling you, bro, it's all about that high time frame. You are at the lows, though, for sure, on VIX, right?
Let's talk about what we're expecting going into the afternoon, guys. Let's talk about FOMC.
Let's do it.
Tommy, kick us off, man. What are you thinking?
Oh, I have no idea what to expect from FOMC today.
All right, Will, what's going on, man? No, I'm just kidding. Go ahead, Tommy.
I was about to get in there.
I do think we look a little bit weak when you zoom out over kind of how the last 2 weeks have traded, as well as where VIX is trading, especially into the event. The fact that they are crushing volatility into FOMC makes me kind of think they're going to spike it afterwards. But I'm really not. Equities are not my specialty, so I'm gonna leave it to you three for some in-depth analysis as far as like how to position and stuff like that. But I am bearish on equities. I'm more bearish than I would let on publicly, but I think the structure looks pretty cooked on a higher time frame.
It definitely looks cooked, man. Look at the I mean, whoa, man. I mean, you're just putting in lower highs, man. This is what I've been saying for a while. Now you're looking for a lower low. You're looking for that.
Tucker,
Then
can you draw a normie diagonal line from the low that was set on like July, first week of July? Normie diagonal down. So yeah, the one right above that.
This one?
Right there across the bottom. Yeah. I think something like that, man. And I think
I was looking at that too, Max. I was
Yeah.
looking at that one.
And I think
I'm
that's
not
a
gonna
dip
lie.
into a shove, especially if it lines up with the end of October FOMC meeting and we get the official pause. And this might segue me into my my 2.5 hour monologue that I'm about to start right now. I'm just kidding, guys. We're not going to do that. But I did a long video again. It is on our YouTube. It's like my most recent video if you want to go watch it. I go through every single example. We don't have to do all of them here on the show, but typically what happens leading into a Fed pause is a very aggressive dip in risk, something like this, where everybody goes, it's completely over. And I think if we saw 4,300 on the S&P 500 or even 4,250, I think a lot of people would be like, that was it, man. Look at that, like head and shoulders, complacency shoulder. You'd see all the 1928 to 1929 Great Depression fractalers come out. You'd see all those guys come out. And then we basically have a true Goldilocks period or window of opportunity where the Fed is now done hiking officially. And unemployment hasn't started to creep up. Delinquencies haven't rose by that much. And things are sustainable even with higher interest rates while some of the previous interest rate hikes work their way through the economy. And it's probably going to be another 9 to 12 months before they're truly all worked through. So if the Fed officially pauses October 1st and we're probably at 4,300 or retesting that August 2022 high right there, that's probably a spot to shove. You know, that's probably a spot to shove.
I don't know, man. I would argue we've had Goldilocks, and I know the timing doesn't line up with the pause and whatnot necessarily, but
then I have to steal because I can't accept your answer. I must steal the screen and I must present it and I must convince you. There's no other option. I must convince you.
Hold on. Look, before we move on, I just want to point out a chart pattern. So where you were there, Tucker, I think that's a fallen channel. So yeah, you come back down and revisit exactly where Max is saying, but I think it's a fallen channel.
Hang on, guys. Let me just adjust the old screen here. I'm on my giant monitor, so it shows up goofy sometimes.
On SPY.
I think the biggest thing I'm looking for in September and October, if equities sell, is what does the sell-off look like, right? Because if it's controlled and it comes down to a demand zone in a controlled fashion, that's definitely, I think, a bid. But if it's an aggressive sell into demand, I'm going to be very, very cautious before I start buying that.
And dude, everybody's been conditioned all year to buy every single dip. Like I think people would be shoving every 50 points down, man. That's the problem.
I kind of maintain as well, Tucker, that if you take away the stealth QE that they performed in March, that we were forming a high time frame complacency shoulder. Like if you just removed that price action entirely. We probably did put in a high time frame complacency shoulder in like March.
Yeah.
April, and they
even with the price action right now, it looks like complacency shoulder.
All right, boys. Let me spend at least 3 hours on this until everybody's exhausted and you have no choice but to agree with me. Okay? How does that sound?
3 hours.
Let them cook.
Let me cook. All right. Let's just say we get the official pause. This is basically FOMC, right? The day after, not this FOMC, but the next one. All right, let's go back throughout history and look at what has happened leading into the Fed pause. So right here, interest rate hikes. Again, yes, we've had a Goldilocks period, but we also moved up with this tightening cycle. Equities have done well while interest rates have been moving up. We dip aggressively into the pause. And then this is like the official cut. We did have some cuts here, but we basically had, if you bought this dip into the Fed pause until the high, you had 420 days and it rallied 60%. Then they cut rates, COVID happens, whatever. Let's keep it moving.
Wait. Pause. If you think he pauses today.
No, I think he skips today.
Okay.
I think two skips equals a pause.
What was the drawdown before the last pause? What was the drawdown there? It
20%.
was 22% over 86 days. I mean, what does that imply extrapolated?
You want to like current?
Yeah. Keep going. I mean,
well, hang on. This is not from the high.
Well, that's not even from the pause, though. You'd have to put it at current price.
No, we dip into the pause. This started before the pause.
You're right.
We dip into the pause. And it's not going to be perfect percentage-wise, right? But point is just like we can dip into it. Let's just keep it moving. All right. We're going to keep it rolling. We're going to keep cooking here. All right. So look what happened. Tightening. Start tightening right around here. Equities continue to grind up. Everybody can't believe it. Everybody's in disbelief. Oh, look at this. We dip aggressively into the pause. Where have we seen this before? We dip aggressively into the pause, and then look what happens. Is everybody exhausted yet?
Okay, so we got one of 22% and one of 13%.
Right. But I'm just saying you dip into the pause. We're dipping. Could it be the same? Now let's keep it moving. All right. Well, I guess we don't have a ton of history here. This was rate tightening. This is actually, I can pull this up. USINT should have more. There we go. Yep. We'll make this orange. So this is the same thing. This one just shows more. So we'll get rid of this. So again, equities rallying. Oh, look, increasing interest rates. Where's the pause? Oh, we dipped into the pause. Once again, we dipped into the pause. Let's see what we dipped into this time. I don't know where you want to mark it from, because technically we went down the week after the pause, but we'll just split the difference. We'll go right in the middle. All right. And then from there, we had another 3 months from the pause. Again, I'm trying to just kind of be impartial. We rallied a little bit, right? Things were prolonged, but this was also the .com crash, so it's maybe a little bit more extreme. But point being is we dip into the pause, and typically we get a pause rally. So I don't know if we've been in a Goldilocks period. I think it's felt like it, but this probably felt like a Goldilocks period too. This probably felt like they brought interest rates from 0, very comparable to where they're at right now, like 5%, 5.25. Like, oh man, this is over. They finally paused. Something's broken. And then like a year and a half almost, we continue on. So I'm just saying, if we get the official pause, we might just see something like this, guys. And we might do the famous pattern where, we go above the previous high like we have before. So
all right. Let me steal. I'll give it back.
Got a stealer. Okay.
I got a steal. This is just first observation, right? If we pause or if we skip today, we pause in October, whatever. Right now, we're down 3% off the highs. From every historical example you gave, minimum is 13%. That's a 3 handle, right? So the spot to shove based on history pre-pause is lower.
It's not about the percentage, though. It's about the timing of the pause. Wherever the pause happens is where you shove. You don't shove before.
Okay, yeah, but I think the drawdown is should be taken into account because it's a 3991. It's 35. I mean, dude.
Well, hang on. I'm not saying to shove here. I'm saying you shove when we get the pause. So I'm short right now. You know that. I'm expecting at least like 4,200.
Well, here's what this implies is that one of these price targets should hit before the November meeting.
Fine with me. I'll print. Let's go.
I put a chart in the equities channel in the Discord.
Will, do you want to screen share the Discord? We'll do a Discord chill, man. You can screen share the Discord.
That's my thought. If you want to pull it up, Tucker.
Huh? Well, do you want to just share your screen?
Share the Discord. It's good to give a little preview of the Discord, man. Let the people know what they're missing out on.
Yeah. Let's see. Hang on, let me share screen, entire screen too.
And after we're done with this, I'd love to talk about BNB, guys.
Yes, that would be a fun one. All right, guys. So this here is our Discord. You can sign up below as well. So check out that premium link. It's really cool. You get to see all of our positions in real time. So that's cool. Additional analysis.
Don't open the actives.
Yeah, don't open the actives, man. We got to keep the actives exclusive.
You show my pictures. Oh, man.
I see the Sanko Discord in there.
Will posted this. All right, wait. What is this? What is this chart you posted, Will?
Yeah, see, Will, I like that, man. I like that. But mine would maybe be a little bit steeper than that, truthfully. I'm not as concerned with the upper trend line, like the upper channel, as I am at a very steep bottom channel. So,
yeah, the middle red line there itself is just kind of like where we double bottomed. It's irrelevant. I think we go through that if we come back and visit that. And that's why I have the lower portion of the channel there. But this is a falling channel. It's a bullish structure, but it definitely looks like it wants to break down again before it breaks out. So that's a long way down if that happens. You can catch support at the midline there. So that's why I wanted to point that out. So if we do catch support at the midline, that's your pricing there. If we don't catch support at the midline, we're going to nuke, probably go straight through that because it'll be a triple bottom, which I don't think a triple bottom will hold personally. And then at that point, it's going to roll down under. It's going to deviate low and then roll back into that zone of that double bottom. And then it has an opportunity to reverse from there, right? It's going to be one of those two. It's either going to be that mid or that low. And what do I have there for pricing? I think I had like 2 something roughly.
42.83 and 43.89.
Yeah, roughly in those ranges is what I'm looking at. I 4,200 is way down there, as you can see. Like that's kind of like the low end range, or actually, I think 44,100 is my low end range because I think if you break that 42.80 structurally, you've broken that in essence a falling channel, right? And that structure is now invalidated, in which case you're probably going to nuke. And then at that point, you'll go down to that 4,100 range if that happens.
Yeah, channel. And guys, if you want to pop in the Discord for 1 month free, 1 whole month free, 30 days before you get charged, and then you could drop it after 30 days and be like, not even for me. Code at the bottom of the screen here, Twitter BB. I didn't make one for YouTube, but you could go to the link in the description of the stream, type in code Twitter BB. You should get 30 days free. So no risk. Come hang out. It's fun. We share all of our stuff in there. It's a good time. I'll keep that up there in case anybody wants to try it out. But yeah, Tucker, I don't really care where it goes, man. Like it could go literally to 3,200, but I'll probably shove when we pause, just because the previous half dozen times, if you've shoved on the official pause, you've done very well.
Yeah. No, yeah, that was my only point, is that I think the level at which you shove when the pause is official is just going to be lower than where you had probably originally marked out, right? Just based on what has happened before.
Yeah.
So what type of pullback do you think then, Tucker, is reasonable to expect?
I mean, 4,000, 4,150. If you get that before a pause, I mean, you got to take into account what Max was talking about too. You got to take into account the labor market. And yeah, I wanted to get to that question also. But
I would love to cook here, unless you want to cook, Tucker. Do you
well,
want to
the
cook?
last thing I'll say is you gotta take into consideration the labor market. Like if he pauses and we are seeing continued claims and initial claims rise, and we are seeing unemployment kind of roll over, then I would be more cautious to shove, especially like what Snorlax said. If it's like a super aggressive sell, like I wouldn't want to shove as in catch a knife. But if we kind of grind down into the pause, then I'd feel more comfortable about it. But yeah, go ahead and cook on the Bitcoin
All
conversation.
right, let me cook. All right, let's do some cooking here, guys. All right, so Bitcoin's only been around for one, I guess, kind of tightening cycle thing, if we even really want to call it. I mean, it was, right, but a little bit different. So let's take a look at what happened here when the Fed paused end of 2018. So again, we dipped aggressively. I know this was choppy, but we did dip aggressively into the official pause. And if you shoved on the pause, just like I'm saying, you should potentially consider shoving here. Shove until the pivot. Bitcoin did extremely, extremely well. So I'm just saying, man, like there's definitely some levels on Bitcoin that I could see getting tagged higher. If we dip to like 21 or 22 and then we get a Fed pause, maybe at the next, not this meeting today, but the subsequent one, the one October 31st, November 1st. So we skip today and we skip again end of October. 2 skips, in my opinion, equals an official pause. And I think that you could probably get that pause rally like we've seen before. And you could probably see Bitcoin up in the mid to upper 30s. And that'd be really nice for miners as well, because the cost to produce a Bitcoin and their break even after the next halving is probably going to be like 35K.
They would need this to happen for
They
sure.
need this to happen.
Yeah.
So
Well,
then
the
why
only
wouldn't
difference
somebody-
is like, sorry, go ahead.
if somebody wanted cheaper Bitcoin, why wouldn't they just keep price suppressed and force capitulation of the miners?
That's a good thought too, because I think what people were talking about, I think it was, I don't remember who it was on our space a couple weeks ago, but the natural progression in mining should be energy companies just swallowing up miners rather than miners continuing to have their own like niche business, right? Like, so that would kind of imply that miners are kind of sacrificed at the altar before the halving or at the halving. And maybe like, can you imagine if Exxon just got into mining? They would be the biggest miner in the world probably quickly, right? So, but I did want to mention the difference here is that Fed pause took place in the pre-halving year, basically at the bottom, which ended up being the bottom, right? But we've kind of gotten that price action without the pause, right? Like we've gotten that echo bubble with no pause and rates continuing to climb. So I don't know. It's similar. It's slightly different, but I don't know, because I would argue we're in late 2019, right? Rather than like
and I would too, by the way.
Yeah,
I would too, by the way. I think that makes a lot more sense contextually, but it's, I think it's potentially less about the halving. I mean, I don't even want to say that necessarily, but I think it's more just so about like if we're going to see risk rally and if we think that equities are going to rally into a pause, or dip into a pause and rally out of the pause. Well, Bitcoin is risk. Bitcoin's going to trade like risk. So is Ethereum, so I could maybe see something like this happening for Bitcoin. And I pulled up, this is Bitcoin, this is NASDAQ, this is effective federal funds rate. Let's say we get this pause right here. So this is the pause. Let's just assume here, I'll zoom in quite a bit. Let's just assume maybe NASDAQ continues to dip right into it, just like we've seen historically. And let's just assume Bitcoin's down somewhere in here. We fill in that CME gap at 21. This is your dip, your 40% drop into the halving, Tucker, the one that you've been calling for a long time, give or take.
Be perfect.
Right? It'd be perfect, right? Dip times out perfectly with the pause. And then from there, equities could maybe go to all-time highs or a new high. Bitcoin could rally up, fill in that monthly imbalance up there, break even cost, and then Bitcoin halving is going to be right around here. So we'll type this out just so people can keep it straight. Bitcoin halving. So if Bitcoin is sitting up here within this month, and by the way, this is a huge monthly inefficiency right here. Like if we finally have filled this gap and we're hanging out right around here, and there's also a CME gap up here, by the way. So we get our 40% drop before the halving. We rally, equities rally. Fed has paused. We're moving sideways. Maybe they start cutting, Q2, something like that. I think this is how it would go, in my opinion. This is how it could go. So I also agree we're probably, if I had gun to my head, where are we closer to? Are we closer to like October? Or I'm sorry. Oops. What the heck? Are we closer to October 2019 or December, January 2018? Probably closer to like we already had our rally. But I mean, I think this is a path that should definitely be considered.
This either ends up being another echo bubble because they will start cutting probably next year, and that would be bearish, or this implies we go to 19K. I get bullish because that's the correction I've been looking for, period. Like, don't care about the Fed, right? And we just have a fast cycle, right? Either we have a very fast cycle because we have these cuts looming next year and basically a recession looming, but the Fed has paused and unemployment still hasn't rolled over. So we can pump, right? Either that's like the cycle and we have it sped up, or we do get this kind of little extra echo bubble to 35K, and then we don't have a cycle until after the imminent recession, which is coming. Like it's something I don't think it's going to be a normal cycle.
No, I don't think it is either. I think this is a period of time where Bitcoin has to effectively start trading like gold and silver. Otherwise, it's doomed. If it continues trading like beta to equities, I think it's going to be in for a really rocky like 3 or 5 years. But I also won't discount the possibility that Bitcoin begins to trade like gold and silver. And I don't think it's coincidence that you have all these institutions now finally trying to get into Bitcoin and talking about a Bitcoin ETF, where maybe they're just prepping for this to be like the 1970s gold run, but they can't pump gold like they used to. So they're going to do it with Bitcoin, and Bitcoin's going to be their new commodity to bid during a recession. So I think there's potentially a narrative there for that. I really do. But I wouldn't say it's over 50% likelihood, but it's not zero. It's not zero that, I mean, look how gold performed. Let's pull up gold. I showed you guys this the other day. I'm going to take off Bitcoin and we'll throw up gold on the top. So we have the NASDAQ, we have gold, and effective federal funds rate. You can see, let's go back further to this one. Let's take a look at this tightening cycle right here. So again, top is gold, middle is NASDAQ, and this is interest rates. So if we mark out the pause, the pause, and then here's the.
I gotta run, guys.
See you, Will.
Well, see you, brother.
Here's the
Good
pause,
luck.
and then here's the pivot. You can see that up until, so this is the NASDAQ again. During the pause, like we've seen, NASDAQ moves up. Gold did move up a little bit, but not like crazy, right? You didn't really, you were much better off holding the NASDAQ during this Fed pause than you were gold. But the difference here is once the Fed began to pivot and we saw rates going down, look what happened to the NASDAQ. NASDAQ got smoked, and at the same time, gold performed pretty damn well. So I'm just saying there is a relatively positive correlation between Bitcoin and gold. It's not perfect, but at periods of time it does sync up. And Tucker, I want to make a video with you on that because we spent some time talking about that. It's possible that Bitcoin might be able to benefit from both the pause and the pivot. It might benefit from the pause because it will act like beta to equities and it will rally up to 35 or 40K. And then there's a possibility that upon the pivot, if equities start dropping, Bitcoin's knee-jerk reaction might be a flush down, but ultimately it will sync up more with gold than equities and continue to move up if equities move down. So I'm just saying it's a complicated path to get there, but there's definitely a scenario where Bitcoin becomes the best performing asset over the next decade. And this is it.
I can get behind that, honestly. I was kind of having a chat with some friends about this yesterday, Max, about how Bitcoin could become like the beta commodity of the next decade. And I know we've been talking plenty on this show and also privately about, I think we need a flush on Bitcoin for it to trade a bit more like a commodity, to flush out maybe more of the tech speculators is the wrong way to phrase it, but I think kind of what I'm inferring, like cartel money almost needs to be flushed out of it a little bit.
Yeah.
But yeah, no, I agree with you. I think it's going to trade like a commodity, and it could trade like the best commodity, the beta commodity, given its relative market cap to gold.
Yeah, I hope it does. I really hope it does. I think that would be a really bright future for Bitcoin. It's got all the principles to be the best performing asset of the next decade. And if it can, during very selective periods, be beta to equities and then other periods of time be beta to gold and silver, that's unbeatable. I know it's a bit of a unicorn, but perhaps it can happen. So at least something I'm looking out for, something I'm looking out for. But we are getting into time here, so maybe we call it.
For sure. Yeah, we can look to wrap things up here. We appreciate y'all for being here as always. We've got a very big day with FOMC incoming here in about 2 hours. So yeah, man your battle stations if you're a trader and you're looking for some event volatility. Hopefully we get some. Hopefully, I don't know if we're going to get anything unexpected from Jerome, but if we do, then the market's definitely going to respond accordingly. But that's all from us, guys. Thank you so much for tuning in. Like Max said, we do have some premium stuff linked in the description of our YouTube, as well as the link tree of our Twitter bio. So make sure to check that out, especially if you want, more of an intimate look at how we're kind of viewing the market right now. But y'all have a great rest of your day. Of course, we'll be back tomorrow breaking down everything that Powell says today. Thanks again.
And just a reminder, guys, that code at the bottom, Twitter BB, if you do want to sign up, you get 1 month for free. So definitely consider checking that out. I would say it's worth it for a 30-day trial period. But thanks, guys. Take care.